Good morning, folks. It's Paul Harrison on Wednesday morning, Wednesday the 13th, the day before Valentine's Day. So don't anybody forget, all right? Okay, so what we got here is some very nice trades that you've been going through. I do appreciate, obviously, the time you're putting in to come up with these stocks, because it's obviously better than just cutting and pasting all the stocks that you got on your watch list. But really, there's some nice stocks that are coming through, but some great, even better learning that I'm going to be able to show you about here now as well. Okay, just another thing, you don't really need to give your explanations as to why you feel those stocks are tradable, because I always go through and just actually see what I see. A lot of the time you can be influenced by what other people see. So I just go in with no assumptions, and I just look for the support and resistance or the potential setup. So what we're looking at here is OGXI. We've got some support around about the $11.50 mark. My concern here is this is less than 4 months. So the stock is actually less than 4 months old. The bounce to less than 4 months. Therefore, it would be something I would be very concerned about trading. I wouldn't really want to trade that. Then we have OMI, which is a trade that has gone. This trade actually we placed. When did we place it? I think we might have placed it in December time. Well, actually, it was either with the Italians. No, it would have been with our German clients. I think OMI, was it the German clients? It was either Germans or Italians, but we got a great setup here. The stock actually sold off, then it came back up, and it posted in a very, very nice little hammer. A shooting star. So more of a doji actually, and then it just really sold off yesterday. So other people in those trades, whoever made it into those trades, that's some nice looking money there for you. ORN. We have some resistance around about 8.30. Having an initial look at this, I thought, okay, well, there's only two clear bounces, be it there and there. The 2-year time frame, having a look at 2 years, there was a little bit more resistance, so back here as well, and back here. You know me, I'm not overly keen on taking a 2-year time frame looking at the stock. Reason being is because if you're justifying your trade with 3 bounces, or in this case 4 bounces within 2 years, the time between bounces is bigger. So generally speaking, what's going to happen is you're going to find that particular stock is going to take a lot longer to actually hit your target price. Okay. Another little telltale sign I'm not overly excited about here is this stock has rallied up significantly. A big up there yesterday. If I was going to trade this, it would have to put in a perfect little doji for me, so I can really get a good entry point. If you're not sure about dojis and what have you, please just do a Google search on them, and they can give you some information there. There's also a book by a guy called Nielsen. I think it's at Nison, Nison. And he's got a candlestick course. Not something I use a huge amount, but can give you a little bit of a further guidance there. Then we have CSH, and again, I think this was a 2-year time frame. Was it 2 years? Yeah, you can just about justify that. Again, be aware of the stock as well. It's pretty gappy. It's put in a nice little little doji here, but it's pretty gappy. It's a pretty crazy stock actually to trade. It not only gapped down here, but it gapped up here as well. Let's just have a look at the earnings, when the earnings came out. Yeah, you see how it actually gapped up before earnings. Now that, if anything, it must give you a little bit of concern as to what's going on. This basically seemed, that the stock gaps up before the earnings, so that's basically saying there's information that's coming up before the actual earnings announcement to the public, and it's done this kind of thing here before as well. So I don't know what's going on there, but we're after the earnings now. Let's put in a little hanging man. So yeah, it is over 2-year time frame. It does clash with a few of my rules, but make your own decision on that. We have PII, a nice upward trending support line. We've just had the earnings announcement come out, and it has put in some indecision. It's come down. It did gap. Well, it didn't quite gap down, but it moved down quite aggressively after the earnings. Then rallied up a little bit, and then a little bit of indecision. Now it's come down to hit that support line. on that bounce as well. Okay, so it's put in a few dojis on that. It's interesting to see actually a lot of the long positions that are available now are actually from upward trending stocks. You're not finding a lot of horizontal stocks that are actually in position to long right now, but that's obviously because the entire market has been rallying up for a while. Polaris. Then we have MRK. Again, upward trending support line, bounce. It did gap down after the earnings. This is something we see a lot with horizontal stocks. If it gaps down, and then there's normally some consolidation here as well, but it looks like it's had 3 up days, so not quite as bad as what you can see with a horizontal one a lot of the time, because sometimes you get the gap down and then it hits the horizontal line, a lot of buying comes in, but there's still actually the activity that will then sell it off further in the longer term. Doesn't always happen like that, but again, you know how it works. Then we have Gill. It's a trade we've taken for a long time. I've taken a fair amount of money on this trade over the months. But again, this is pretty much a perfect setup. We've got 1 bounce, 2 bounces, 3 bounces, 4 bounces, all set up there. And again, it came down and put in the dojis, the indecision, a big down day. You would probably have had to have your stop loss there, but again, I think that trade is now gone. Gildan. GIL has Hotel Alpha Sierra. We have some resistance around about the $39 mark. Again, so it's out. This is outside the 4-month period. So we've got September, October, November, December, January, and we're into February now. So it's almost 6 months. Therefore, with those bounces, yeah, it's not a problem. Plus, it has given us a nice little entry point. You notice that as this is what I like to see. I like to see the indecision as coming up to the resistance, because obviously the bulls are losing power and the bears are starting to come in. I like to see that kind of indecision as it's coming to resistance, because you're expecting it to be selling off there, and it's put in these small little days here, so that can be quite helpful for you as well. Remember, a lot of the time you actually make your money on getting into the trade. Because if you can really refine your entry point, it's going to help you a lot. Upward trending support line here with AMT. Again, I wouldn't be looking to trade this right away, because I would want a smaller little entry point here, possibly something like that, or like that, or like that to actually be on the support line here. That would probably make me a little bit more excited than what it is right now. Then we have ARPA, which is Apache, which we've spoken about a fair amount of time. The concern I have with this stock right now, if you're in it, that's one thing. If you're not in it, this is something to be aware of. It's moved very quickly previously off this resistance line. Okay, so it moved down quite quickly there. It moved down quite quickly there. It hasn't moved. It hasn't done that with this. Maybe it's just taking its time, possibly. But just something to be aware of. Again, there's a lot of indecision here, but it's been, what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 2 full weeks, because obviously the stock market's only open 5 days a week for what we do here. But that concerns me a little bit. Just, it's come up to resistance, it's put in the indecision, because ideally what we want to do is we want to see it actually sell off down to the downside there. APA, then we have JBL. Again, downward trending resistance. Yeah. The entry point. Yep, looking okay. Again, the smaller the entry point, the better. You know what I mean by that. Because you're obviously risking more. And then we have save. And again, a downward trending resistance line. Again, it's moved pretty quickly off that off the resistance. I would say, I mean, the thing is, this is quite interesting, because we have a number of these stocks that are actually coming down like this. Where they're all in the same industry, I'm not exactly sure. However, the thing is, possibly what we could be adding to all this indecision here is that the stock is actually the stock is trying to sell off, but because the market is keep going up, the market keeps going up. It's basically a bit of a clash. If the stock wants to sell off, but the market is going up, obviously there's going to be some tough times there. You know, it adds to the indecision, so to speak. Now, the funny thing is that if we do see a sell-off, and let's have a look at the S&P at the moment. I mean, the S&P is at a high now, and it's putting in I mean, yesterday was a very flat day, very, very flat day, and as was what was yesterday, Tuesday, as was Monday, was also a very flat day. I think that, I mean, if we go back, let's have a look here. Let's go back over 3 years. Lukash was telling me something interesting. I mean, that's the highest it's been in 3 years. Right now is at the highest it's been in 3 years. But Lukash was telling me something interesting the other day, that it's the highest it's been. I mean, again, we go back 5 years. The stock market's never been higher. We go back 10 years. Okay, I mean, we're coming up to the highs of 2007, 2008. So, is it going to continue forging higher? I don't know. I mean, this is giving you a real contrast here. I mean, you're reading in the papers about how bad the economy is and stuff like that, but the stock market's at the highest it's ever been. Now, what I'm thinking is this is obviously putting in some kind of situation where you've got to be asking yourself, what's keeping the money going? What's keeping the stock market going up? I think the answer's got to be sort of the quantitative easing. So they're printing more money's coming into the stock market, which is keeping it going up, but you can't keep doing that, particularly as we're starting to hit a lot of these technical indicators that are showing that potentially there could be a pretty big pretty big correction here. So again, folks, I'm suggesting very heavily that you have long and short positions, because we don't know which way the stock market's going to go. You never know. I mean, it's coming up to resistance. So, from what we know from technicals, would suggest that there's going to be a correction. There's going to be a sell-off, but you never ever know. So, have long and short positions, and please, you're 3 to 1 at any one time. I personally wouldn't have more than 6 trades unless they are all very, very. They are all more than 3 to 1. I've got longs and shorts, and it makes a lot of sense. So, I hope that's been helpful. But keep those positions, longs and shorts, folks, because I think if we're going to see something move, it's going to be pretty significant. So make sure you got longs and shorts. So all the very best. Speak to you very soon. Cheers, folks. Bye-bye.